What's up, guys? I am nobody special. Happy Friday, everybody. It is that time again. It is Power Hour. We are into the last 45 minutes of the trading week. And what a week it has been. So much wonderful and awful things going on in the world. What an amazing time we live in. Are we watching the unraveling of civilization as we know it? Is everything going to be fine? Are all these effects going to be transitory? Who knows? A lot of big stories this week. Silver, precious metals, but silver in particular had a pretty good week. Things going well. I hate to say it. I feel like I'm going to jinx it. When I look at a silver chart, I feel like Indiana Jones at the end of the Raiders of the Lost Ark. Just don't look at it. Just don't look at it. As if I might have some kind of quantum observer's effect on the movement of the price chart. The second I look at it, it turns south. But so far, so good. There, I said it. What else we got going on in the world? Bitcoin is on a tear lately. What is going on with Bitcoin? We did a video about Bitcoin last night, and I tell you, nothing gets the controversy going more than the Bitcoin discussion. Man, I tell you, there is a lot of passion on both sides. And, man, yeah, a lot of people really hate Bitcoin. Not only do they hate Bitcoin, but they want everybody to hate Bitcoin. Look, I'm not in love with it. I don't cuddle with my Bitcoin. It doesn't keep me warm at night until I fall asleep. Although if it goes to 1 million, I might. But yeah, it really brings out the passionate, and apparently my repetitive, totally unoriginal joke about my big fat melon of a head is stirring up controversy. I've seen some people quote, comment in the articles, enough with that joke already. I'm sick of hearing about it. Some people are saying, melon man, we want melon. I never thought my head would be controversial. But hey, I guess controversy is good for business, right? The Howard Stern effect, I'll take it. What else we got going on? The Royal Mint supposedly running low on silver blanks. There's a rumor going around. Been having a hard time finding any info on that, but that could be interesting. Keep your eye on that. My favorite stock, AMC, is having a good couple of days. We'll see if there is some trickery afoot in the last few minutes of trading today because it's options expiration, and the shorties just love to smash AMC right before options expiration. So much going on, so little time. Also, the situation at the ports. We've had some interesting developments in the supply chain this week. We'll get into that in a little bit more, but it looks like our problems in the supply chain may be migrating upstream, and we'll get into a little bit more of that. But we put on some extra shifts at the port in LA, and China's having some trouble getting boats loaded, and we've actually seen shipping rates come down quite a bit this week. So it's possible, but that these problems in the supply chain, they may look like they're getting better, but it's actually the problems are just migrating upstream further, and I don't think it's going to have any net effect on us, the consumer, at the end of the day. I think the problems are just moving around. And again, we're in this whack-a-mole game right now where new issues pop up and we attack them, and then two more pop up over here. And, we're even starting to see it. The Fed, they're calling transitory almost a forbidden word now. Saw some comments out of some Fed governors saying we need to stop with that language. So, first they didn't even admit that there was inflation. It was below the target. And then it was here, and it's okay, it's only temporary. And then they clarified temporary means prices are going to go up and they're going to stay up. Now they're saying prices are going to keep going up. So what are they going to say tomorrow? Oh boy. Oh boy. So with that, it is time to get into it. Now again, there's some controversy going on around this shrinking of the melon head, and some of you don't like it. So, okay, we're going to put that joke to bed for a while. We're not going to make any cracks about my melon head. Let's just shrink me here. What is that? Who put that there? Who put a melon on my desktop? I apologize, folks. I don't know where that came from. That's just we're gonna get rid of that. Anyway, this is an unfortunate instance, and when we have these unfortunate occasions, I like to keep this close by for use only in the most dire of circumstances. James Earl Jones, not your best moment. So, with that in mind, let's look here. The first thing I want to address is I don't want to call it a rumor because that suggests that I don't believe it. I do believe this, that the UK Royal Mint has run out of silver blanks. Okay, I have no reason to doubt the story, although I haven't been able to confirm it. Right, so far it seems like everything on this story started with Andy Schectman at Miles Franklin, and he went on this video here with the Liberty and Finance channel. Great channel, by the way. Highly recommend those guys. Talking about how the UK Royal Mint was going to, I guess, miss delivery on some of these silver Britanias that Miles Franklin had ordered. And it stems from a shortage of these silver blanks. Now, I am not an expert on the minting of silver coins, but what it looks like is the UK Royal Mint gets just the blank round coins from some other supplier, and then they stamp them with the Britannia carvings, as you see on the screen right now. And they have run out of these silver blanks. Now, this does not mean there is a silver shortage. Doesn't mean there isn't. It just means there is a silver blanks shortage temporarily, right? This could be caused by all of the many supply chain problems that are going on right now. Or this could be the harbinger of things to come. Maybe there is a silver shortage on the horizon. However, this is an isolated case right now. So I don't want to jump on the, this is it, silver squeeze, it's happening. I don't want to give false hopes. I mean, certainly it's, I guess you'll say good news if you're one of the folks who's been following silver squeeze. I guess we could call that good news, but I don't think this makes a trend just yet. I have no reason to doubt Andy Schectman. I think he's a solid guy. I've been following him for a while now. I don't think he would make this up. So I believe him. That being said, the UK Royal Mint has plenty of other silver for sale. Britannias are still for sale. They haven't run out of Britannias. They're just not making as many, I guess. So we'll keep an eye on this story. We'll see if anything else develops. But for now, that's about it. And with that, I want to go to the comments a little bit here. There is only one way. Thank you, sir, very much for the super chat and for supporting the channel. I really appreciate that. He says, when are you going to buy your first deck of Pokemon cards? I am not big into the Pokemon cards, sir. I think I wouldn't hold my breath on that one. I will say I may buy a deck of Pokemon cards if my daughters get into it. So there's that. That being said, I still have my baseball card collection from when I was a kid, and my 83 Topps Don Mattingly rookie card is still the pride of my collection. Not my most valuable baseball card, but my favorite. Don Mattingly, Donnie Baseball, he was my favorite player when I was a kid. I'm a lefty, he's a lefty. He's the reason why I played first base. That being said, I was not that good of a baseball player. I didn't suck, but I wasn't that good. But thank you, sir, very much for supporting the channel. I very much appreciate that. And there you are again. Thank you, sir, with your upside down emoji. Zeeble Fritz, Tether's final pump and dump. I'm not sure I would call it that. We'll get into Zeeble. We'll get into this in a minute about Bitcoin. I did a video on this yesterday. I'll rehash it a little bit. I'm not going to reproduce the whole video, but there's some solid case for Bitcoin's run right now. The Tether story is still out there. I'm not denying the Tether story. I think that will come back to haunt us. But Bitcoin could go up 4 or 5x before the Tether story breaks. And then I think it'll probably sell off like 20 to 50% if that story turns out to be true. But that could be 20 to 50% from a considerably higher value than it is today. And that's why I do not change my Bitcoin approach. I dollar cost average using an app called Swan. I'll put that link in the description below to sign up for Swan. You get $10 of free Bitcoin if you're interested in checking it out. Full disclosure, that is an affiliate link. I will always let you guys know when I use affiliate links. But I do stand by that product, and I use it myself, and I have had no issues with Swan whatsoever. All right. So with that, let's get into this. Again, we are shrinking me. We won't use the word. We won't say it. All right, I am definitely not gonna say it. Oh God, there it is again. All right, so here is the Bitcoin chart, and look at this run Bitcoin is having. Let's get me out of the way. Check that out. Over 61,000. Not yet the all-time high. All-time high was around 64,000. All-time high close was about 63.5. We are in the ballpark here. We may threaten that number this weekend. I mentioned in my video yesterday that we were kind of struggling at this resistance for a few days around 57, 58,000, and it's almost like somebody was listening when I made that video, because we blew right through it a few hours later. And here we are now over that 60,000 psychological threshold. If we stay above this 61 or this $60,000 threshold, I would say our next resistance is probably around, well, I'll say it's at the all-time high. That's our next resistance level. If we hold here, then we're, 64 is the next resistance. And then after that, we are in uncharted territory. So it could be anything. So what is going on? Here's why I say it's not just another Tether pump, okay? There could be some of that going on. Again, I don't trust the folks over at Tether. Shout out to Mike Binder from Robin RC Models, who pointed this out to me yesterday. This is a tweet by SEC Investor Ed, i.e. the official Twitter account of the Securities Exchange Commission. And they tweeted out, before investing in a fund that holds Bitcoin futures contracts, make sure you carefully weigh the potential risks and benefits. Check out our investor bulletin to learn more. Now, if you're not sure what they're talking about here, there are no Bitcoin futures ETFs because the SEC has not approved any Bitcoin futures ETFs. That's interesting. Why would they tweet out that before investing in one, you must understand the risks and potential benefits, unless they were about to approve one? So that has a lot of people saying, oh boy, it's time. They're going to approve it. They're going to approve it. Hold on, not so fast. Okay. I do not share the enthusiasm that many of my fellow Bitcoin investors have on this subject. Okay. Two things. Number one, a Bitcoin ETF, a Bitcoin ETF that actually holds Bitcoin would be good for Bitcoin in the short term, because it would cause a huge amount of money to suddenly flow into Bitcoin as the ETF took investors' money and used it to buy the coin. That would drive the price up. And as I said in my video yesterday, the Bitcoin market is very illiquid right now. Most Bitcoin, about 80% of all Bitcoin in existence, is sitting in wallets where it has been there for over a year. It's effectively off the market, and it's going to take much higher prices to draw some of that Bitcoin back into the market. And a Bitcoin ETF that buys Bitcoin could be what causes that to happen. Anyways, it would drive prices considerably higher. However, my big beef with that is one of the main draws of Bitcoin is its decentralized nature. It's the fact that these crooks in the legacy financial system don't control it. They can't move it as easily as they used to. All right. Now, there's plenty of other cons, negatives to Bitcoin. But one of the biggest pros is that these crooks can't touch it. And if we go allow a Bitcoin ETF, well, anybody who follows silver and gold for the last year understands how ETFs can be used to manipulate the supply and demand dynamic that allows the banks and the financial institutions to basically siphon off demand for their own gain at the expense of retail investors. And I don't want to see that happen in Bitcoin. That's one complaint I have about a Bitcoin ETF. The other complaint is we're not talking about a Bitcoin ETF. We're talking about a Bitcoin futures ETF. So this Bitcoin futures ETF is not going to be buying Bitcoin. They are going to be driving up the price of future Bitcoin. Now, while that may result in some effect on the spot price of the Bitcoin itself, what it is going to do is it's going to, I think, siphon demand again. I think a lot of people who might otherwise do research into Bitcoin and what it takes to own it and how to properly handle it and secure it, right? Right now, there's people doing that every day, are learning how Bitcoin works, learning about security and private keys, and they're getting involved. Well, if there is some Bitcoin futures ETF where a lazy investor can just go get price exposure to it, or think he's got price exposure to it, he may do that. So a Bitcoin futures ETF may actually slow the adoption of the coin itself. And I don't want to see that. And the other thing is it may sour a lot of investors, because if you don't really understand, a futures ETF is always in contango, right? When you're bidding on futures, you're paying for time, and time is always ticking off the clock. So you're constantly overpaying, because Bitcoin futures almost always trade above the current Bitcoin price. And then when that future gets to maturity, it expires at a lower price than you paid for it. So this Bitcoin futures ETF may be in a state of perpetually losing money, as most futures ETFs do. So that may sour a lot of investors and drive them out of Bitcoin. So I have a lot of reasons I'm not so excited about this Bitcoin futures ETF. I would be more excited for a regular Bitcoin ETF that's going to buy the actual asset, but even that I have reservations about. So short term, it might drive some enthusiasm and it may drive prices up, but I'm not convinced of the long-term benefits of this. There, I've said it. That is my skepticism. All right, and I tend to be very skeptical of central authority anyway. But to add to this tweet, we saw this article came out today from the SEC. Make sure you can see. You can. SEC is poised to allow the first Bitcoin futures ETF to begin trading, sources say. Securities Exchange Commission is set to allow the first U.S. Bitcoin futures exchange traded funds to start trading. A person familiar with the SEC's deliberations told CNBC that the regulator isn't likely to block ETF proposals by ProShares and Invesco, which are based on futures contracts. Bitcoin traded north of $60,000 on Friday. So, long story short, it looks like this is going to happen, or at least there's indicators this is going to happen. Real quick also, I just want to mention this. If you didn't catch my video yesterday, let's get me out of the way. What we're looking at on this chart is the Bitcoin supply, long-term holder supply shock. All right, and this, the gray line on this chart is Bitcoin price over time, going back to 2015. Keep in mind this is a logarithmic chart. So as you get to the top of the chart, these are much bigger price moves than this chart looks like. And the green line, that is the LTH supply shock ratio, which is a measure of the quantity of Bitcoin that is in long-term storage, or basically Bitcoin that's effectively off the market, divided by the Bitcoin that is trading more frequently or has only recently been bought. And you'll notice we are at an all-time high on that green line. That means there is more Bitcoin in permanent or long-term storage, or just lost forever, as a fraction of all available Bitcoin than at any point in history. And this is important because this is typically an indicator that price is about to run big time. And anytime you see these blue vertical lines here, anytime we've been anywhere near this level has been followed by a substantial movement in Bitcoin's price. Again, this is a logarithmic chart, so if these moves don't look that big, keep in mind, these are huge, huge percentage moves. And here we are at near an all-time high in price, but also an all-time high in this long-term holder supply shock ratio, which means Bitcoin may be about to explode higher in price. And I do mean explode. There are people calling for 100,000 before the end of this calendar year. There are only about 2.5 months left in this calendar year. So that would be a big move. Now, the reason why this is important is this is basically a measure of the liquidity of the Bitcoin market. If there is not that much Bitcoin available to trade hands, that means new money entering the market can have a much bigger effect on the price of the underlying commodity. If there's not that much available, then the bid and the ask tend to go wild. And you can get very big price swings in a very short amount of time. I mean, you could see $1 trillion added to Bitcoin's market cap, and it would not take $1 trillion new dollars to make that happen. It would only take a couple of billion, or say the approval of a Bitcoin ETF. So something to keep an eye on. This is a story that's not going away. All right. Before we change subjects, let's check out some of these comments. Thank you, Mr. Dumb Money Media, for your super chat and for supporting the channel. I prefer getting Cardano. I think their ventures in Africa governments, and long-term scalability is going to be possible winner in like 7 years. I must admit, Mr. Media, again, thank you for supporting the channel, that I am not terribly familiar with Cardano. I don't own any personally. Let me give you my relatively underinformed opinion of Cardano. Again, I don't follow it that closely. To my knowledge, the biggest draw of Cardano, especially this year, has been the ESG crowd likes it because it is right now, the most popular proof of stake coin. Now, proof of stake, long story short, a proof of stake coin doesn't take nearly as much energy to secure the network, whereas Bitcoin and Ethereum in its current form are proof of work coins where these machines have to work overtime, generating lots of heat and consuming lots of power in order to secure the network or the mining. That's very energy intensive for Bitcoin and for Ethereum and for a lot of the other coins. But Cardano is proof of stake, which uses just a small fraction of that energy. And that has made it very appealing to the ESG, environmental social governance crowd. So it's driven a lot of money into Cardano as almost a form of protest against Bitcoin's energy footprint, if you can believe that. And you remember the big sell-off that happened, I think, in May or June, was when Elon Musk came out and said he didn't like the carbon footprint of Bitcoin shortly after announcing Tesla was going to be taking Bitcoin, right? So Elon Musk kind of flip-flopped and Bitcoin sold off. And shortly after that, the Chinese bans started, and there was this snowball of bad news for Bitcoin that caused the price to sell off over 50%. Well, the reason I mention all of that is because there is a change coming to the Ethereum network in, I believe, December is currently, where Ethereum 2.0 is going to come out. Ethereum is going to go from proof of work, its current form, to proof of stake, similar to Cardano. And when that happens, Ethereum will be competing with Cardano for that ESG money. And that may cause the rug to be pulled out from underneath Cardano. Again, I don't know enough about Cardano to say definitively that's going to happen, but I can say that Ethereum going proof of stake is going to draw a lot of ESG money into Ethereum. Now, I mean, I mine Ethereum right now. I perform these proof of work calculations with some of my equipment here, so my mining equipment will be made effectively worthless, not entirely, but I won't be able to mine Ethereum anymore after this happens in December. And I'm not so worried about that because I think the Ethereum that I've already mined is going to go up so much in value that it's going to more than offset that. Now, my mining equipment, there are other coins out there that you can mine that are proof of work that may be profitable, like ETH Classic or what's the other one, Raven Coin. Coins I am not nearly as excited about as I am with Ethereum, but I may be able to mine those profitably and then just convert them over to Bitcoin and Ethereum as I mine them, although I think there's a lot of people are planning to do that, and that may make the difficulty go up so high that I can't even do that. So I may be put out of the mining business when this change happens. I don't know. But keep an eye on that Ethereum fork that's coming up in December, Dumb Money Media, because that may have a big impact on the value of your Cardano. Just something to look at. And I'll look into the ventures in Africa. I don't know what that is that you're mentioning it, but that is interesting. Check out the highlights from the Cardano Summit that happened. They signed a deal with Boost Mobile Dish. Okay, I'll have to take a look at that one. Robin RC Models, sir, thank you very much for the super chat for supporting the channel. A futures ETF is likely the traditional finance's last attempt to manipulate Bitcoin. Problem is that you'll have to own Bitcoin in order to move prices. I would hesitate to say it's going to be their last attempt. I don't think it'll be their last attempt. I think they will never stop attempting. But to your point, it's going to be hard for them because Bitcoin right now is controlled by whales. Right? It's controlled by the earliest adopters of Bitcoin. And do you know who the earliest adopters of Bitcoin were? Very suspicious, bordering on paranoid, libertarian, small government, get out of my life, establishment financial kind of people, right? People who are inherently mistrustful, even hateful of central authorities. And they will not give up their Bitcoin to the establishment financial system for them to manipulate it. And as long as the whales control most of the Bitcoin, which they do, because the whales were the ones who were mining it, there's 18 million Bitcoin right now in existence, and there's only ever going to be 21 million. Well, of that 18 million in existence right now, is something like 14 or 15 million of it is owned by these original adopters, these whales, and they are not going to give it up. They won't. So the only way Establishment Financial can take it over is to buy enough of it to be able to contend with that. And in doing so, they will drive the price higher. They'll put themselves out of business trying. So I would love to see them try. I'd love to see Establishment Finance try to buy enough Bitcoin to control it, because that would make my Bitcoin much more valuable. And I don't think they'll be able to. I don't think they have enough money to do that. Let's put it that way. There is not enough money in existence for them to do it. Anyway, with that, we are going to shrink me again. Shrinking me. Okay, and let's see. Oh, there he is again. Oh, no. Oh, not that guy again. Oh, jeez. All right. So real quick, I want to talk about this one. This is something that came up with AMC, my darling AMC, my favorite of the individual stocks, which is poised, it looks like, to close above $40 today. Let's go to a 1 month chart here. No, that chart's no good. There we go. So this is going back about 2-3 months here. You can see AMC been kind of dying a death of 1,000 cuts since the big run back in June, but it may have broken out of this consolidation channel. It retook its 50-day moving average here. Now, the reason I'm bringing up AMC right now is because there is a new strategy in the works by the meme stock apes, and that is this DRS, or Direct Register System, I think is what the S stands for. And here's this article in Barron's that talks about it. The Reddit crowd has found a new tactic in the war against Wall Street, cutting brokers out altogether. Here, let's make this a little easier for you guys to read. And we are going to zoom in, make Mrs. Special happy. She says I should zoom in more often. Help your eyes. So a percolating theme among retail investors came to a boil on Thursday, and some meme stocks ended the day simmering. Since being knocked out of January's short squeeze by online brokers trying to avoid margin calls, retail investors have been seeking alternatives to their multi-front war on short-selling hedge funds. And after months of research, they appear to have found it, cutting brokers out altogether. In recent days, an increasing number of retail investors have swapped their torches and pitchforks and TD Ameritrade accounts for direct registration platforms like ComputerShare, which have seen an influx of business from the meme crowd. Okay, now let me start by being upfront with my own limitations here as I put my spin on this story. I am not fluent in the inner workings of market mechanics. When a lot of this stuff with like the DTCC and the clearinghouses, I just want to be honest. A lot of it goes right over my smooth brain. Okay, I want to be upfront. I don't want to pretend to be something I'm not here. However, here is my understanding of the story. The running theory is that when you have a Robinhood account or a TD Ameritrade account and you buy a stock, in this case, these meme stocks like AMC or GameStop, that those brokerages are just depositing an IOU in your account, that they're not actually going out to the market and buying an actual share from the float. So in effect, what they're doing is they are creating synthetic shares, or they are shorting the stock, right? So there has been this move, and it stems from this absolute distrust of the brokerages, because these brokerages screwed us in January. I mean, they just flat out said, you are no longer allowed to buy this stock, you can only sell. Which, how are they not in handcuffs over that? How has nobody been arrested for that, especially in light of this recent information where this guy at AMC, the head of trading, sold his personal stake in AMC right before doing that, basically trading on information that was not public, that he alone was privy to for his own personal financial gain. How was he not in handcuffs already? So out of this mistrust for these brokerages, they're starting to use this ComputerShare platform, which is a direct registry agent. Now, what that does is you notify, say, TD Ameritrade, I want my AMC shares moved out of TD Ameritrade and moved into this direct registry agent, Computershare. And what they do is they basically register my shares specifically. Jack Gamble owns these shares with the company AMC. And the theory is that so many people are doing this right now that these brokerages are finally being forced to go out and actually buy these shares that these people paid for long ago. That they're actually going out into the market and buying shares that are harder and harder to come by now to deliver them to these direct registry agents. That you can't just create a synthetic share and give it to Computershare. You actually need to secure an actual share, a real share, and then hand it over. And the theory is, again, I cannot prove or disprove this, but the theory is that this recent run in these last few days here is being caused by the brokerages having to go into the open market and buy up actual shares to deliver to these direct registry agents. Now, again, I don't know enough about this to prove it one way or the other. And I can tell you, I have not done this. I may evoke the ire of some of my fellow apes, but I just don't know enough about it. I haven't done my own due diligence enough. I'm a busy guy, sorry, to do it. But I'm looking into it. I may end up doing this. And now, again, not financial advice, not a financial advisor. Do your own research, your own DD, arrive at a decision right for you based on your unique situation. There, my butt is covered. There are supposedly downsides to doing this direct registry service in that it makes it harder for you to sell. You may not be able to sell on a minute's notice if you ever want to. For example, if the rug gets pulled out or if the brokerages pull some kind of shady stuff like they did in January and this stock goes into free fall, it may take you a full day or two to sell your shares through this direct registry service versus if they were still residing in TD Ameritrade or in Robinhood. Right? So you may get trapped in your position. That's the downside. Also, I don't know how much it costs to go through one of these DRS services. I don't know if there is a cost at all or what it is. I just don't know that much about it. But that story is out there and it's gaining momentum. There's a lot of chatter on Reddit about it. And that Reddit chatter is starting to translate into some financial press chatter. And we are seeing some price movement along with it. So maybe there's some validity to that story. We will keep our eyes on that one. All right. Let's move on from the AMC story. This is also the AMC story. All right. China and Evergrande and Chinese GDP. What a mess over in China. First off, I just want to talk about Microsoft has shut down LinkedIn in China due to a challenging environment, otherwise known as the Chinese central government is exerting so much control over the internet and over tech companies that Microsoft, who was really like the only American big tech firm doing business in China, has finally just said, F it, we're out. We're done. We're not even trying anymore. So that's interesting. It's good to see big tech saying F you to the CCP instead of bending over backwards for Chinese Communist Party censors. All right, move on here. I love articles like this where the Chinese government officials go in and reassure us that everything is okay. They say Evergrande debt woes are manageable and China's central bank can handle it. The spillover effect of China Evergrande Group's debt problems on the banking system is controllable, a central bank official said on Friday in a rare official comment on a liquidity crisis. So controllable, right? So controllable that the whole Chinese junk bond market is going to hell in a handbasket, right? They have everything under control. Chinese authorities are urging Evergrande to step up asset disposals and the resumption of projects. Head of financial market at the People's Bank of China told in a briefing, adding that the individual financial institutions did not have highly concentrated exposure to Evergrande. So the People's Bank of China is trying to assure us that there is no risk to the financial system from Evergrande. And I just want to reiterate that Evergrande is the symptom, not the disease. The disease is the collapse of the Chinese housing market, and Evergrande is just the largest developer. They're just the figurehead for this issue, right? This is much, much bigger than Evergrande. So just want to mention that. China comes out with their GDP numbers on Monday. It is going to be a big day on Monday. Now, here's one thing. I don't trust the numbers that come out of the Chinese government. I don't trust them any more than I trust gas station sushi, or as I said in one of my videos a while again, exiled Nigerian princes who need help repatriating funds. I just don't trust it because they say whatever they want. They do whatever they want. There's no independent press that asks any questions. They just do what they want. So whatever GDP numbers come out of China on Monday, don't just take them with a grain of salt. Take them with a bag of salt because they're garbage. Their numbers are garbage. Case in point, Evergrande passed an audit in June. Right? What was that? 4 months ago? They did an audit of Evergrande and said, yep, their books look good. No risk here. Number one Evergrande. Yeah. Boy, that didn't age well, did it? But there's one thing I want to point out here. Now, don't look so much into these actual numbers as you do look at the trend. This is all of these global banks lowering their forecasts for Chinese GDP growth. Now, I just want to reiterate, these, I believe, are 2021 growth forecasts. Let me verify that. Yes, this is for this year. All right. Now, that's important because next year, I think next year China's GDP growth is going to be negative, deeply negative. I think China is heading for a recession, if not a depression. But you'll notice here all of these from 8.8 to 8.3, from 8.2 to 7.9. These are all recent. We're all seeing pretty much across the board 0.3 to a 0.5% decrease in China's GDP forecast for this year. And this year is almost over. So this is big. All right. The retail situation, right? The trade deficit the United States has with China is bigger than ever before. So China will see receivables from the U.S. Basically, think all that stimmy money that got mailed out to people, it's all in China now, right? Because you got your stimulus and then you went on Amazon and you bought something that was made in China. It's what the whole country did, So there is billions and billions of dollars flowing into China in exchange for these boats that are sitting off the coast in L.A. However, that is about to stop. And we'll get into this a little bit more in some other topics. China's starting to grind under the demands here, and they're starting to have energy shortages, and those energy shortages are starting to hit industrial output. So besides the fact that the property sector is effectively frozen, I mean frozen solid, sales are just dropping off a cliff. Besides that, this energy crisis, and to a lesser extent these floods in northern China, are going to have near-term impacts on GDP, right? If the factory has no power, they're not producing anything, they're not selling anything. So keep an eye on that story. Again, don't put too much stock in the numbers that come out of China on Monday because you just can't trust it. But the fact that all of these banks are cutting their forecasts, you can see the trend emerging there. And also, this just in today, in the last couple of hours, Evergrande was in talks, emphasis was in talks to sell their $1.7 billion Hong Kong headquarters skyscraper. And those talks have just fallen apart. So again, Evergrande has been in cash raising mode. China state-owned Yuexu property has pulled out of a proposed $1.7 billion deal to buy China Evergrande Group's Hong Kong headquarters building over worries about the developer's dire financial situation. So the reason I mention this is because Evergrande, you always see these articles when they tell you that the situation is contained. They'll say Evergrande owes $300 billion and has $250 billion in assets. Well, here is $1.7 billion of that $250 billion in assets that they cannot cash out. They can't sell it. And if you can't sell it, it ain't really an asset. I said it, right? If they can't get $1.7 billion for this building, then they have no business saying $1.7 billion under their assets headline, which means they're going to have to take less than $1.7 billion. And if the value of this skyscraper, say they only sell it for $1.4 billion, What does that do to the value of the skyscraper next to it? And the one next to that? And the one next to that? Right? Every time you buy a house, you look at the comparable sales, right? Well, skyscrapers work the same way. And Evergrande has been unable to sell just about anything. They can't liquidate any of these assets. And so they have to lower their prices. And if they lower their prices, they're going to devalue the rest of their assets. So again, I think they are much more in debt and they're in much deeper trouble than even the financial press is letting on. And Mike Binder says, your Chinese pronunciation makes me laugh. Sorry, Mike, I don't get out much. I live a very sheltered life here in rural Pennsylvania. I have quite an accent. I don't have an accent. Everybody else in the world has an accent, right? Isn't that how it works? Everybody else talks funny. I talk normal. I don't really believe that. Don't jump down my throat. My God, I'll have a woke protest outside my front door. All right, now on to this issue, which I think is going to be important in the coming days. I have talked an awful lot about the situation at U.S. ports and the logjam trying to offload the boats, and I see a new problem developing. And you'll see here, this is talking about China ports. China port congestion falls sharply. Trans-Pacific shipping rates retreat. So what's going on, because of these power cuts in China, the factory output in China is going down. And because the factory output is going down, there's less stuff to put onto the boats. Okay? And if there's less stuff to put onto the boats, that means the rate of new ships showing up in Los Angeles is about to slow down. And they just added this third shift or round-the-clock offloading of boats in Los Angeles. They just added, they're going to work around the clock at the port. The longshoremen reached some kind of agreement. So they're going to start unloading the boats faster. And China is having trouble loading the boats as fast, which means the situation in the ports. Combine that with the fact that Christmas season is basically over when it comes to international shipping, right? It's here already or it ain't coming by Christmas. So the order volume is going to start going down. The output in China is going down, and the offloading of the boats is going up. The situation at ports is going away. All right, maybe not going away outright, but it's on the way down. We have had peak port congestion. Now, you'll notice I didn't say the supply chain problems are going down, because it's still going to be just as hard for you to get anything. Because remember, this isn't the fact that everybody is catching up with things. The problems now stems from China can't make the stuff fast enough because they're having to cut power because of the energy crisis. So it's just a whole new set of problems. The problem has moved further upstream in the supply chain. Keep your eye on that, because if the Chinese economy does collapse, as I think it's about to, who knows what that's going to have, what effect that'll have on the supply of everything. So keep your eye on the situation with the factory output in China and these power cuts. This is getting interesting. I just want to mention a few things here. Ships at anchor off the Shanghai Ningbo, that's the busiest port in China, or the second busiest port in China, down nearly 50% over the last 18 days. And there's one thing I definitely wanted to mention here. Trans-Pacific spot container rates have plateaued and in some cases pulled back, spurring speculation that container investors' bull run has peaked and relief is on the way for U.S. importers. The case for calling the top, Chinese container port congestion has drastically declined over recent weeks. China's factories are being plagued by power outages that constrain export capacity, and U.S. consumer sentiment is faltering. The counter-argument, U.S. port congestion remains historically high. Rates were only temporarily reduced by China's Golden Week holiday. Data on declining rates is ambiguous because different indexes give different numbers. Okay, now, I want to mention something else here. According to Fredo's Baltic Daily Index, which does include premium surcharges in its calculations, Asia to West Coast spot rates were down to $13,000 per 40-foot equivalent. Now, that's still 3.5 times last year's rate, but it is 37% below the all-time high of $20,000 assessed on September 15th. 37% down from the mid-September numbers. We have seen peak freight rates. The problem now is not that the boats can't get it here. The problem now is that China can't make it fast enough. All right. Now, the reason why I say that, the reason why I'm drawing attention to this is, we're done with Darth Vader for today. Because I have several times, again, not a financial advisor, not financial advice, do your own research, your own DD, arrive at a decision right for you based on your unique situation. But I have mentioned several times in the past a company called Britanias that I had been investing in, and I have done very well. I have more than tripled my initial investment. I sold off some of it. I added to my position a couple of weeks ago. However, this chart is scary. This chart looks like if we get a little bit of a bounce here, we might be setting up for a head and shoulders. All right, and the fact that that data point that I just gave you, here, sorry about that, folks. Let me move me. This is an ugly looking chart. We broke below our 50-day moving average. We came back up and we retested it and we failed lower. I have been in cash raising mode. I have begun to trim my position in Britanias. I haven't sold out of it entirely. I am looking to get a retest of this 50-day line, so I think I can get a few more bucks for my shares before I exit entirely. But this trade has had a fantastic run. I'm happy with it, and I think it is time to get out because this stock is priced for perfection because of what these international shipping rates have done. And if those rates are done climbing and are going to recover soon, then this guy is heading lower. So I have begun to unwind my position in Britanias. Again, not financial advice, just throwing it out there. This is what I'm doing. Again, this is not to say that the supply chain problems are going away. This is just to say that the problem has moved further upstream in the supply chain. It's no longer on our side of the pond. Now the problem's over in China because of the energy and because of everything going on there. They can't make the stuff fast enough. All right, so keep that in mind. All right, let's read a couple more comments here. Not to mention the first-rate construction. That's right, Stephen Mellis talking about the Evergrande. Have you guys ever heard of tofu dregs? There's some very interesting videos on YouTube about tofu dregs, which is the slang term for this awful construction in some of these areas in China where the buildings just crumble. Like you can squeeze the concrete with your hands and it just crumbles in your hands. And I feel bad for the people that live in these buildings or that might eventually live because I think China is going to be plagued by the problem of shoddy workmanship in its construction industry for decades to come. I really do. Remember that condo that collapsed in Miami and all the people that got pancaked that lived there? Yeah, that's going to be happening all over China soon. Mike Binder says it's getting worse. Don't think that the rates go down much more. It's just a dip going to go even up more. The shippers rather scrap vessels and write them off than run on loss. I don't think the shippers are going to run on a loss, Mike. The shippers are actually making money hand over fist right now. The thing is they have run so far. Let me bring that Britanias chart up. The thing is they've run so far that they're priced for absolute perfection. And I don't think the situation is any more absolutely perfect. Like, look at this one-year chart of Britanias. I mean, this is nuts. September of last year, this was a $5 stock. It went up as high as almost as 90. Now it's at 70, right? That is a monstrous run, right? This thing could settle down somewhere in between 5 and 70, right? But that's a pretty big range, right? If this settles in the 40s or in the 50s, well, that's down about 30-40% from here. And again, this stock was running on the expectation that the shipping rates were going to continue climbing. They've stopped. They've actually pulled back considerably. Remember that one article, 37%. And now that the problem is in China, now that we're starting to see the Chinese can't get the stuff onto the boats, well, now there's not going to be this traffic jam on the boats. The boats are going to be just sitting there waiting to get loaded. There's not going to be any reason for the shippers to pay so much money to get their stuff on the boat because it can't get made in time. And again, maybe that this is not going to go back to normal, right? It may settle at a rate that's still considerably higher than where it was a few years ago. Like they were saying in that article, it was 13,000 and change, which is still 3.5 times what it was going for last year. but 2 weeks ago it was trading at 5 or 6 times last year. So it's these stocks are priced for perfection, and they're not going to see perfection anymore. So I think these stocks have a long way to go. I'm talking about the shipping stocks specifically here. Again, the supply chain problems are not going away, but the fact that they've moved upstream, I think the shippers have run as far as they're going to run. Could be wrong, but like I said, nobody ever got hurt taking a profit. I've had a pretty good run in Danaos. My first shares I bought in the 20s. Actually, I bought it at $20 exactly. I did add to my position around 74 a few weeks ago, so I'd be taking a loss on those shares. But that was a small addition to my position. I'm still way, way above my cost basis. So, and I've already cashed out quite a bit. So I'm happy with this one. I think the story is played out. And I've mentioned before, I'm in cash raising mode because I don't know what is coming. I do know that something, that everything is breaking down, right? Between the ports and the truck drivers and the situation with the airlines and Southwest, and half of the Chicago Police Department may be about to get laid off or fired outright. And then, China's power outages and Europe's gas prices. Stuff is breaking down, and I don't know what that looks like, but it can't be good for the economy. So I am raising cash, anticipating a lot of stuff is going to go on sale. I want to be ready to make the most of it. And a stock like this that's had a great run and it looks like it's peaked, that's an easy win, an easy way to raise some cash. All right. Moving on from that one. Money printing and inflation leads to reduced supply. Look at what airlines have done. That is true, Mike. And I don't know. I mean, almost certainly their answer to whatever is coming is going to be to print, right? That's what central banks always do first, is they print. They try to print their way out of problems. But I think things will get worse before they turn the printing press back on. And I say back on, they haven't even turned it off yet. They haven't even started the taper yet, and we're already talking about it like it's already happened. So the bond market and the treasury market and the tapering, combined with the situation over in China, I mean, you're starting to hear grumblings that there is some market event is on the horizon, right? And I don't know, maybe when other people are fearful, it's time to be greedy. I feel like I'm in a situation here where I want to raise cash. That's all. Now, that's from a trade that I think has played out. Let me move on to a trade that I think is just getting started, and that is the natural gas trade, and particularly the liquefied natural gas trade. All right, Asia LNG price rise on firm Chinese demand, eyes on Russian flow. Asian liquefied natural gas prices continued to rise this week on the back of higher European gas prices, which fueled competition from buyers in Asia, while demand is firm from top buyer China. The average LNG price for November delivery into Northeast Asia was estimated at $38.50 per million BTUs, or MBTUs, up $1.50 from the previous week. I was blown away when I saw this number. I knew the gas prices were getting out of control, but I had no idea. $38.50 per MBTU. That is ridiculously high. Ridiculously high. And just so you know, what we pay for natural gas here in the States, this is the Henry Hub, which is like the spot market for natural gas, $5.43 per MBTU. That's what natural gas costs in the States. And according to this, they're paying $38.50 per MBTU in Asia. That is a huge, huge arbitrage. Massive price difference. And when you look at that, now you can kind of understand why this stock that I have mentioned in some of my previous articles, again, not a financial advisor, not financial advice, just telling you what I do, Cheniere Energy. This stock has been on an absolute tear yesterday. Cheniere Energy, ticker symbol LNG. They own the Sabine Pass and Corpus Christi natural gas liquefaction facilities on the Gulf Coast. They take American natural gas, they super chill it, they load it on the boats in a liquid state, they sail it over to Europe and Asia, and they sell it into those markets at what is now a ridiculously high price. And look at the year this stock has had, starting around $50, now at $1.10. And here's the deal with this stock, okay? they like to sell their natural gas in long-term supply contracts. In any given time, they'll sell their natural gas about 80% under these long-term agreements and about 20% on the spot market. So a lot of their natural gas has already been sold at previously agreed upon prices, typically Henry Hub plus a fee. Remember, Henry Hub was like $5.43. However, with the spot market now at $38.50 per MBTU, you're seeing things like this story pop up, where China is looking to lock in U.S. LNG as the energy crunch raises concerns. Major Chinese energy companies are in advanced talks with U.S. exporters to secure long-term liquefied natural gas supplies as soaring gas prices and domestic power shortages heighten concerns about the country's fuel security, several sources said. At least 5 firms, including state majors Sinopec Corp and China National Offshore Oil Company and local government-backed energy distributors, are in discussions with U.S. exporters, mainly Cheniere and Ventral Global. So what's going on here is China is looking to lock in long-term prices right now, and they're looking to lock in at some of these ridiculously high prices, like this $38.50 per million BTU. So what Cheniere has an opportunity to do right now is to take some of this capacity for its LNG, even some of this LNG that it hasn't even finished building the facilities yet. They can secure long-term pricing at these levels, guaranteeing incredibly high degrees of profitability for years to come. They can basically hedge this, sell it way out at a time when prices are what appear to be peaks or heading towards peaks. So you've got Asian energy companies have been ordered by the government to go secure these supplies at any cost, driving the spot prices through the roof. And you've got Cheniere Energy here in the States who has said, yeah, we'll sell you stuff, but you're going to have to pay this price for the next 15 years. So this company's earnings are going to explode. All right. Now this company, some of their short-term earnings per share numbers, they've taken hits in the past because it's been a construction company. They've got a lot of debt. It cost billions of dollars to build these facilities. They took a dive when the pandemic hit. But now with energy prices on the rise, this is a immensely profitable play. And this isn't just playing on higher natural gas prices. This is a play on the spread in natural gas prices between the U.S. and Europe getting bigger. Now, keep in mind, in the U.S., the political climate in this country is unfavorable to natural gas production, right? Fracking, there's protests and pipelines and everything. I don't know if that's gonna last. After the winter that we have that's on the horizon, when energy prices are expected to rise as high as 30%, there may be pressure to increase the flow of natural gas in the U.S. So you may see U.S. natural gas prices come down or at least level off while Asian prices and European prices continue to rise. So this spread between the $38.50 per MBTU that they're paying in Asia and the $5.43 that they're charging on Henry Hub, who knows how big that could get. And every dollar that spread grows is another dollar of profitability for Cheniere Energy. So that's why I like this one. Again, not financial advice. This is just one that I'm keeping an eye on. Anyways, with that, let's see some more comments here. I'm late. I was out buying some silver. Very nice, Mr. Benthammer. Silver had a heck of a week. Actually, let's see what silver did today. We're going to close the LNG chart. Again, I hate to look at it. I feel like Indiana Jones. Like I just want to peek at the ark. It's going to make my face melt off or my head explode. Yep, see, I looked at it and it's down. There you go. It's my fault, folks. I did it. I apologize. All right, let's look at a 1 month chart. Okay, yeah, heck of a week. Up almost $1 on the week. So, maybe this is the inflation story is finally starting to affect it. Maybe now that the mainstream is finally admitting that inflation is not just a theory among Wall Street Silver members on Reddit, that inflation is actually here, that it's not transitory, that it's not going away. So maybe this is going to drive some more money into silver. God knows they got enough from me this year. Yes, wait till they show them empty shelves, Mike. Yeah, I believe we could see some empty shelves. I mean, we're already seeing empty shelves. Like Costco has started rearranging their stores to make it look less like empty shelves. But you notice, like at Costco, they're tearing down those 5, 10, 6 level shelves. They're knocking a lot of those down, and they're just doing floor displays because Costco doesn't have the inventory. A lot of these retailers don't have the inventory they once did. And I'm definitely noticing at the supermarket the quality of the fresh produce has been going down significantly recently because the stuff is just spending too much time sitting in warehouses and sitting on trucks. Wonder if the U.S. keeps on selling the LNG once the first American bank has an issue with a defaulting Chinese real estate bond. That's interesting. I don't. I think China is really shooting themselves in the foot. Whose comment was that? That was that was Mike again. I don't know what China is thinking. Well, I know what they're thinking. They're thinking don't let their people get too upset. You know, the reason why they're screwing the offshore investors is because Evergrande can't possibly pay everybody. They can only pay a couple of people, and the Chinese Communist Party is most afraid of its own people. They fear their own people more than they fear U.S. banks because they can't stand social unrest. When there's social unrest, communists, what's their reaction? They usually crack down on it. And, look, if they crack down on it too tight, they might end up having more social unrest. And next thing you know, there's rebellion and civil war. So because the people have no vote the bums out option like we have here in the States and in other countries, when people become dissatisfied with their government and these oppressive regimes, it tends to get turned into bloodshed. And that is what the CCP fears most. So they will pay their own people, their individual citizens first, and they will screw the foreign investors in order to do that. Now, that is going to make the whole country of China uninvestable, right? If you're watching what's happened, if you're a foreign investor, are you going to go buy offshore bonds denominated in dollars from a Chinese company now after seeing what they do? Of course not. So the flow of capital into China is going to freeze up. Right? Now, the flow of money, we're still going to buy our crap from them as long as they can make it, as long as they can keep their power running. But I think the days of billions and trillions of dollars flowing into China to finance constructions and to make loans to Chinese companies, I think those days are over. I would, again, I've been saying for a while, I would not touch a Chinese investment with a 10-foot pole right now. Just don't trust it. How much nat gas could be in a 20-gram jerry can? I'll fill my boat, take it to Europe, and get rich. Well, you got to keep it cold while you're there. Funny thing about your 20G jerry can, it gets warm and that gas expands. You have to have something to do with it. Supposedly those LNG tankers actually run on the gas that evaporates off while it's in transit. It's kind of interesting. I'm an engineer. I like stuff like that. But I'm never investing in any Chinese crap. I agree with you, Rusty. I just think there's plenty of good investment options in the world. There is no reason to take on the counterparty risk of the Chinese Communist Party. There's just no reason to do it. I mean, if you really want to do business with crooks who can steal your money at any time, you don't have to go further than the States to find that, right? There's plenty of people in the States that will gladly rip you off. Same thing in Europe. There's crooks everywhere. Why do we need to go that far to find crooks? Driving and listening. Thank you, Bravura Media Company. I appreciate you letting me keep you company on your drive home. I still work from home, so I don't really have that whole drive home thing. One more story real quick I want to do or just mention. Again, shout out to Mike Binder, who found this gem. Taiwan Semiconductor announces a chip plant in Japan and flags tight capacity through 2022. So this is a big deal because I don't think this has any effect. It's going to take years to build a chip plant, right? These are massive facilities. But the fact that they're building it in Japan is interesting. That tells me this has geopolitical implications because Taiwan is the world's supplier of chips, or one of the biggest. I think it's 1/3 of all the chips in the world are made in Taiwan. And there's obviously friction with mainland China. It's always been there, but it's been more so lately, right? With Chinese fighters flying into Taiwanese airspace. And what do you think China does if the economy does collapse in China? What do you think China does to maintain control? You remember what the military junta did in Argentina when their economy collapsed? They decided to wag the dog and they invaded the Falkland Islands. Because when you're an oppressive regime and you maintain an iron fist on power, one of the ways to stay in power when your people get angry is to direct that anger outward. And I would not be terribly surprised to see the Chinese Communist Party try to save its own skin by starting a war it's not sure it can win in Taiwan. And so there are geopolitical implications of this collapse in the Chinese economy, right? We've seen it before. We've seen this wagging of the dog. When economic times get hard, dictators start wars. And, with the flights flying over Taiwan and everything, who knows, folks? And, obviously America's standing in the world after the, disaster in Afghanistan. Is America going to get into another armed conflict right now? Again, I don't want to wade into political waters here, but let's just hash this out in our heads, right? If you're China and you're going to make a move on Taiwan, there are more and more factors driving you to do it sooner versus later right now. I'm not saying it's about to fire off, especially because October is almost over. Supposedly there's only 2 times of year, like April and October is the only time when the weather in the Taiwanese Strait is favorable to some kind of amphibious operation. So if China were to invade Taiwan, it would either happen in October or April. It's probably too late for them to launch a full-scale invasion now because you just can't amass that many troops undetected. Everybody would know. Anyways, the fact that Taiwan Semi is building a chip plant in Japan, there's a few ways to look at it. Number one, they're trying to tell China taking over Taiwan will not give you a stranglehold over the entire global chip shortage. We're building manufacturing capacity in Japan, so there is less incentive for China to invade Taiwan because they won't be able to corner the whole semiconductor movement, right? Japan will be able to make chips if they take Taiwan. The flip side to that coin is if there is too much semiconductor manufacturing capability outside of Taiwan, then there's also less economic incentive for other Western democracies to come to Taiwan's aid if China does invade Taiwan. So this is kind of a political gamble here, to be honest with you. I don't know which way that would go. I don't know if this makes China more likely or less likely to pull something in Taiwan. I really don't. Either way, it's going to take years to play out. It's not going to affect the chip shortage. It looks like the chip shortage isn't going away anytime soon. But thank you, Mike Bender, for sending me that link. You've spotted a couple of good ones these last couple of days, Mike. Thank you for that. Between the tweet from the SEC and now this one. Don T77, thank you, sir, for the super chat, for supporting the channel. I very much appreciate your support. Thanks for contributing to my continued education and for the non-financial advice. The non-financial advice. Yes, this is not financial advice. Very much. Don, you're very welcome, and thank you, sir, for your support of the channel. Thank you, guys, all you guys, for watching. Real quick, a few more comments here. China is going to start a war. I hope you're wrong, Rusty. I really hope you're wrong, because I think that would be... It's been a long time since 2 industrialized powers have fought each other. It's been a long time. And technology and the ability to just inflict mass casualties has gotten exponentially better than the last time something like that fired off. So I hope that doesn't happen. I don't know. I think we should go to war with the moon. We can expand the military, set up a UBI, and get rid of the debt ceiling right off the bat. I like the way you think, dumb. We must defeat the moon people. Of course, I've seen that movie, right? Isn't the moon full of technologically advanced Nazis who fled the Earth after World War II? What was that movie called? Oh, I can't remember that movie. Iron Sky? Is that what it was? Anyways, that was a funny movie. I think they made a sequel to Iron Sky, too, with dinosaurs or something like that. Anyways, that was bad movies. The CCP or Taiwan will disappear if they invade before the intellectual property of Intel, AMD, and so on moved. The factories will be damaged during the invasion. The U.S. will make sure of that. Yeah, Mike, I don't see the semiconductor factories surviving any kind of conflict. I think China would try to capture them intact, so maybe they don't get taken right away. But you may see Taiwan sabotage them to not allow them to be taken, or if China lost said conflict, you may see China lob some ballistic missiles at those facilities just to, kind of like set the barn on fire on their way out, scorched earth kind of thing. Either way, a conflict firing off in Taiwan would be disastrous for the global economy. That's for sure. Which, by the way, U.S., get your act together and start building some semiconductor manufacturing capacity. What are we waiting for? Why are we not building chip factories in this country? Is there no venture capital available? Is there nobody who... I don't know. I see no reason why we shouldn't be making our own chips. All of the R&D and everything happens here already. Why don't we just make it here? We're allowed to make things, right? Is the U.S. allowed to make things? Is there some new rule that says U.S. can't make anything? That we're only allowed to export movies and financial crises? I don't know. Just a bad idea. Anyways, guys, it is 4:26. I think I have prattled and rambled on long enough. I want to thank you guys for spending your Friday afternoon here, for listening to me. Thank you very much for the super chats, everybody, for supporting the channel. Thank you for your comments and your good ideas. Please keep them coming. They keep feeding me ideas for future videos. That's about all I got for you today, folks. Again, I want to thank you for your time. Thank you for watching. Don't forget, hit that like button, subscribe to my channel. Oh, one more thing. I have to say, I am at around 1,930 subscribers. Get me over 2,000, folks. My wife keeps telling me, you have to ask people to share it on Facebook and everything else and to tweet it out. You have to ask people to share your videos. She's really on my case, and she is tough, guys. So I have to do this. Please share these videos on Facebook and other social media. Tell your friends about us. Help get me over that 2,000 mark. I'm hoping we can break 2,000 by the end of the weekend for no reason other than that is a psychological win for me, and it makes me feel great. So I would appreciate that if you guys could do that. Anyways, guys, in the meantime, live small,